Make sure you watch the video all the way through. I'm going to show you some of my weekly charts. This is really important stuff. Watch the video all the way through. Just quickly, I've talked about the Elliott wave count. I believe that we've now completed the intermediate wave 4 over here. And again, I've marked it as primary wave 1, primary wave 2 in the 4-hour time frame, intermediate wave 1, 2, intermediate wave 3, and I told you I believe this is intermediate wave 4. We're getting intermediate wave 5 that will unfold in 5 minor waves down to complete crash wave 3, primary wave 3. Then I think you'll get a rally back up for primary wave 4 over the holidays, and then I think we'll see more selling into January that will create a tradable Bitcoin bottom, probably near 50% or more. Be just under 50% or at 50% or just over 50% as we did when we kicked off the last bear market. You're seeing the divergences play out. This bear flag evolved into a head and shoulder, into a rising wedge, and it turned off the trend line of resistance with our linear scaling. Here I have the log scaling, so the trend line is a little bit different, and we have the negative divergences playing out on the MACD and up here on the RSI. These divergences, calling turning points, I've used them over and over. I used it to call the top back over here. I used it to call the bottoms over here. I used it to call turning points before that, back over the summer. The peaks, used it to call the April bottom. And again, I told you we were not going to go above 98,900 with this move, even though I predicted this rally. I have the guts to tell you exactly what I think, and I told you there can't be an overlap with this level. If this is wave 4, intermediate wave 4, it can't go above 98,900. So again, I believe I was correct in calling for that rally to the low to mid 90,000 range. I told you we could go as high as the high 90,000 range, not above 98,900, which I was correct. We came up to the 200 period moving average. We're getting rejection with the Fed. Now we're going to move and get the economic data next week. We're going to get Bank of Japan raising rates, the unwinding of the yen carry trade. And what do we have down here? We have pring parameter rolling over just like it did back over here. Do you see this? It's been in the negative region. Up here, the pull-ups to the center line right here has been where the rallies have ended. Right here, it ended right here with the final exit point at 116,000. It went negative. Pring parameter went negative here in the 4-hour time frame after the top and with the liquidation move. Now we've come back up, and again we bottomed out right here and recycled back up here with the intermediate wave 3. This is why I was predicting completing of that wave, predicting intermediate wave 4 would form. We're rolling over again, and again, 80,000 is not the bottom. You're going to drop to a new low. All the people that are telling us, I was listening to one guy, how everybody's so afraid, and yet I've called the bottom. And again, these are the people that never saw the top, have been calling bottoms all the way down, going to be scrambling to do damage control when we move to new lows, telling us why they were wrong again. And again, the sell-off's not over. I keep telling you that. My signals, which got it right, my signals, which are correct, continue to tell me there is more downside coming, and we've already confirmed a new bear market. We're not going to new highs. The so-called experts and the moon boys that are telling us that are going to be wrong. Parameter in the daily time frame is telling us we're moving into a new bear market now. Again, there's been a change in behavior. Rather than firming up at the center line, it's moved into the negative region, just as it did back over here in the last bear market. You've dropped below the Bitcoin average price, and you ended up dropping 52%. I think you'll move further away from Bitcoin's average price, further away from the 50-week moving average, and I think you'll come down, take out this support level, and likely move down into the 63,000 area, or just above it, or just below it. That's a 50% drop. Moving further away from Bitcoin's average price, moving further away from the 50-week moving average. The 100 period is getting ready to cross below Bitcoin's average price in the coming days ahead. I think you'll get another push down, and that could mark a bottom, getting us further away from Bitcoin's average price, getting us further away from the 50-week moving average for a massive counter trend that I think Bitcoin will bottom by January around 50% lower and get a massive bear market rally back to those levels, and absolutely convince the people that never saw this sell-off coming, the experts, the moon boys, the herd, convince them that the bottom's in and it's over, and you'll likely just get a bear market rally like what we had back over here in the daily time frame. This is the last bear market. No bullish diversions. We didn't bottom out until there was a bullish divergence here with pring parameter in the daily time frame. Additionally, momentum is negative rather than firming up here at the center line. We've dropped below it and we remain negative just as we did with the last bear market. You remain negative until you formed a bullish divergence, and then moved into positive territory, got back above the 100, eventually got back above Bitcoin's average price. You firmed up at Bitcoin's average price, and we've seen that happen. That's been the behavior, it remaining in the positive region. Now we're moving into the negative region. There's been a change of behavior, again, confirming the market in the daily time frame dropping below Bitcoin's average price. I made a video about that about 6 or 7 videos back that you could see confirmation in the daily time frame with Bitcoin's average price of a bear market, just like I did with the 50-week moving average, just like I did in the monthly time frame with the 10-month moving average and the MACD, the last of the last confirming signals of the bear market, the MACD rolling over in the monthly time frame. Again, as I'm making the video, Bitcoin's down 1.85%. There is no bullish divergence. We're seeing on the RSI or the MACD, we're seeing the breakdown of the rising wedge. Hang on, my trend line moved on me. I love these charts, but you hit save sometimes and the trend lines move on you. It drives me bananas. We saw an extreme with our low at 80,000. You're likely going to take that out. There is no bullish divergence. We remain pegged in the negative region with the RSI here. So again, the pull-ups to the 50 level just above it over here, just added here, just slightly above it, added here. Again, they have been where lower highs are setting up, and got one now completing here, just like we had back over here at the final exit point for our right shoulder. The head and shoulders played out beautifully. By the way, NVIDIA, I'll link my latest video on the stock market. At the end of this one, I show NVIDIA has got the same pattern Bitcoin did with the head and shoulders exactly. It's likely about to break down and see what the same thing happen as what we saw with Bitcoin. There is no bullish divergence on the MACD. Do you see this? Hello? Bottom is not in. Stochastics rolled back over. The stochastic formed a divergence. It got a lower high. Well, price moves slightly higher. You got a divergence into the trend line of resistance. Likely get a divergence forming under 74,000, the April low. I think you'll get a bounce surrounding the holidays, and then I think you'll get another dump in January. Stock market plays catch up to Bitcoin. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel today. These are the charts that I use to make my decisions with Bitcoin, and they have been absolutely very, very helpful to me. I hope they're helpful to you. If you find that cutting edge information useful, please support the channel. I don't have sponsors. I turn those offers down, but I need to hear from you in order to make it work. Let me know you want this information rather than having me go golf or something. I need to hear from you in order to make it work. So if you could just take a moment to do what you can to help out, follow the link below. It'll take you to a secured site. You could donate any amount you want or make it a recurring donation. I thank you for your consideration for that. We had a major sell signal that turned by the close into a minor, rebounded a little bit, still ended down 2% there on Friday's session. But we had another major signal like we had right here. Went away, but we still have this one, and again, we're likely going down to take out this level. This is one of the reasons why I thought we were going to get that rally. I actually called the bottom and predicted the rally before we got that signal, though, and again, it marked the top as well. Major sell signal up there. Some of these minor signals back and forth along the way. We did have that major signal right before the counter trend and the final exit point at 116,000. Now, it is the Sunday session. We have just a few more hours left in the Sunday session to close the week out. And what are we doing? We're breaking down from the rising wedge pattern. We had a bear flag that evolved into a rising wedge straight into the declining trend line from the top. And you can see that right here. This is our linear scaling. You got a beautiful channel, falling price channel. And again, we're likely turning, as I told you, with the Fed, which we did do. We continue to sell off with the Fed. You can see that I've marked it here on this chart each time. We've had the Fed announcements, we've sold off. Here, we didn't get cuts. Here, in September, we did. Oh, that's so bullish. And Bitcoin declines, and we get the left shoulder. And then we move slightly higher to the final resistance level, and we broke out, got a fake breakout to fool everybody, and then we turned. And again, everybody saying, oh, we're going to go to new highs, keep saying the same thing, that everybody's so bearish, Bitcoin couldn't have topped. Are you kidding? We had the largest liquidation in history. Everybody was super bullish, and we had that largest liquidation in history because many of the leverage traders were way over leveraged. And so again, they've got wiped out. There wasn't the money to push Bitcoin back up. The institutions are selling. We keep being told all the way down, oh no, the institutions are buying, they're buying. Yeah, they may be buying at some points, but they're selling. And that's why we're seeing Bitcoin drop. Turned off the 4-year turned off the resistance with the 4-year cycle. So again, this is playing out nicely. Again, I think you get a leg down in December to take out 80,000. I think you'll get a rally over the holidays, over Christmas week and New Year's week. I think you'll rebound back up for a counter trend. I think you get another dump in January, and I think Bitcoin will get a bottom, dropping 40 to 50%. 40% is down here at the 4,000. That's possible. Bottoms here. My guess is we get closer to 50,000 or maybe over it. Last bear market to kick off, which is what we're doing. We're kicking off a bear market. If the Bitcoin crashes, kick off bear markets. Last one was 52%. That would take us to 60,000. Here again, I push this down to January towards a 50 or 52% decline. Then I think you get a massive rebound. I'll be looking to close my short positions there, my swing trades, and looking for a long opportunity. I think you're going to drop here, though, and form a divergence and get a rebound, and then I think you're going to drop again. Maybe you get a triple divergence. We'll see. But right now we're down 1.72% on Bitcoin. On the Sunday session, we're breaking down from the rising wedge, turning off of the trend line with the Fed meeting, getting the topping tails. I warned you about all this. And back over here, before the rally ever started, I predicted we would bottom the week ahead of Thanksgiving. I told you we get a Thanksgiving rally. I told you it might end after Thanksgiving, they come back and sell, or it might drag out into the Fed meeting. It dragged out into the Fed meeting. I was right about all of it. Again, 80,000 is not the bottom over here. Again, those telling us that it is a bottom, they keep telling us everything's a bottom. Over here, the liquidation move was a bottom. We rallied, we went to a new low. Over here, we rallied up. We got the final exit point for the right shoulder, which again was the Fed meeting, by the way. And I lost my train of thought there. The Fed meeting here, we had the Fed right there, and we had the sell off at 29%. But that was the final exit point, and we're not going above 116,000 again. We may go to the 90,000 to 100,000, above 100,000. With the counter trend, the larger counter trend bear market rally, but I don't think you're going above this resistance zone at all. The 116 to 126,000 area is gone, in my opinion. We've started the bear market. I called the top correctly at resistance, predicted this crash. It's played out, and I keep saying it. Any rally back up is a gift to the bears. These rallies back up are gifts to the bears as they add to their short positions, and it's an opportunity for the longs to close their long positions, but again, most of them likely will not do it. We get down here, get the larger rally, they're going to become so convinced that the bottom's in and this is the rally, they're not going to do it over here. You'll have a few people that'll get scared. There'll be some selling pressure because people will be scared. And the institutions will sell back into the rally again, and you'll have some people that will be scared because this just happened. Most of the herd and the moon boys, they're gonna ride this thing all the way down. They always do. March, what the sell-offs that have happened and have been associated with the Fed meetings in the last previous 4 meetings here. Now we got this one, the 5th, and again, you're likely going to get this downturn. Probably get something similar to this where you get this 29% drop. Will probably drop down. Here I've marked just to move somewhere under 74,000, the April low, when I called the bottom. Again, got very bullish down here at support, got very bearish up here at resistance. I'll be getting very bullish down here somewhere when I see evidence of a bottom. But here are, again, the climbs that have happened surrounding the Fed. Now, we just had the Fed pause. That's why Bitcoin's going to go lower. The herd delusional going, oh, the Fed started QE. They did not start QE. They started reserve management purchases, which are buying short-term bonds. QE is when they start buying the longer-term treasuries and mortgage-backed securities, and that's stimulus. This is they're attempting to stabilize the financial system. This is a red flag. We're about to have a banking crisis. If everything's so good, the economy's so great, and the banks are so wonderful, in a good place, why does the Fed need to do this? The Fed is buying $40 billion in short-term treasury bills monthly to address growing stress and liquidity shortages in the financial system, with money markets and rebuilding bank reserves, preventing rate spikes with the repo market, and ensuring smooth operation, not as stimulus or QE, but as reserve management to keep the system stable, especially with the year-end pressures and tax payments draining cash. Powell's even said this is not QE, but yet the moon boys, the herd, the experts, they all believe this is QE. It's not. The reserve management purchases, the RMPs, they focus on purchasing short-term treasuries. Quantitative easing involves the purchase of long-term treasuries and mortgage-backed securities. The RMPs are a technical fix used to ensure the banking system has ample supply of reserves, which helps maintain orderly conditions in short-term money markets and prevent disruptions to financial stability. The purpose of the RMPs to ensure the financial system functions smoothly by providing enough liquidity. That's the key. It provides liquidity. It's not stimulus, to prevent short-term interest rates like the repo rates from spiking unexpectedly. The purpose of QE is stimulus, to provide stimulus. That's why the Fed avoids calling the RMPs QE. We're not trying to juice the economy, trying to stabilize the financial system and provide liquidity for the banks, because there are signs of stress in the banking system. If you've been following my work, you know that. Boom boys, I heard the experts, again, they keep calling this QE, and it is not QE. What it is a huge red flag that something's wrong with the economy and that a banking crisis is likely coming. So last week we got the Fed officially pausing rate cuts. I think the next time they do rate cuts, they'll be doing an emergency meeting and panicking. That's what I think likely going to be the case. I think the stock market will start playing catch up to Bitcoin. But this is what happened when the Fed cut rates. It's 2 times here in the Fed meetings, the last 4 times. And again, it's likely we're going to get a Fed sell-off, as I warned. That seems to be happening. Now, we're going to also get the yen carry trade unwind as the Bank of Japan. The Bank of Japan is likely to raise rates this coming Friday. And again, we're probably already starting to see the beginnings of that volatility. They borrow money in yen. People borrow money in yen. They convert it to another currency like dollars, and then they buy assets with that. It's a leveraged play with borrowed money. It's going to end up, as the rates go higher, the yen is going to start to rise. They're going to sell other assets like Bitcoin and crypto and stocks and even bonds to pay off these yen-denominated loans. That's the unwind of the yen carry trade. A lot of people are dismissing it. The same people that are dismissing that, by the way, are the same people telling us there's no AI bubble, and the same people that are telling us that we have QE starting. I mean, you can't make this stuff up. This is Bitcoin in the weekly time frame. This is the Bank of Japan rate hikes in 2024 and 2025, and it's been associated with sell-offs with Bitcoin. And I've just taken it from the high here. We peaked right before it happened, and you ended up getting over nearly 28% drop here. We rallied back up to a lower high, and then they did it again. And in July, they did it. Here it was in March, and here in July, they did it. And you ended up dropping 29% here very quickly from that lower high that set up. Did it in January of 2025, and that was associated with the top or the left shoulder that I have drawn here. And that, the market peaked on Inauguration Day, the president gave his inaugurational address. And days later, we had the Bank of Japan raising rates again, and that was associated with a sell-off of about 30% or so. We rallied up to resistance, and we hit it 3 times in July and August, and then again in October, and it formed a divergence. began to sell off. We broke the trend line from the April low. We're bouncing off the 50-week. We were above it here, bounced off of it over here, slightly breached it, bounced off of it here. Here we're breaking it. We're going to get further away from this 50 before we get a bigger rally back up to it. That's why I think you're going to drop down closer towards the 200-week moving average, closing in now on 57,000. We've seen sell-offs with the Bank of Japan raising rates. We've seen sell-offs with the Fed meetings and the Fed cutting rates in recent meetings. Again, you're likely getting the next leg down right now, turning off of that trend line from the highs there on the linear scaling, as I've talked about and showed you just moments ago on the daily chart. I think you get this drop, and if we drop, 30% or so when they start doing it or whatever, if we take it from our recent high, it might be more. But I think you're going to get the next two legs down in December and on into January. Next week, we're also going to have the jobs report on Tuesday before the stock market opens. It comes in with a negative number or a very weak number. Markets could sell off, Bitcoin could sell off, concerns about the economy and recession. Also, Thursday, before the market opens, we'll get the CPI inflation data. And if that starts ticking up, we start getting hot reports with inflation data ticking higher, that can produce a sell-off. And again, if you get weak economic data, with the Labor Department, you get increasing inflation, then concerns about stagflation start to happen. So with the Fed pausing cuts, again, the crypto community wants the Fed to cut, and they believe that's so bullish. That's why I think we're going to rally big time once we get closer to the 200-period moving average, probably closer to a 50% drop or maybe more, like we did the last time when we kicked off the bear market. Fed not cutting, Fed meetings being associated with the drop, and here the Bank of Japan rate hikes have been associated with the volatility with Bitcoin. So it's likely, again, Bitcoin's going to do what I told you it was going to do. It's going to go down here, test 74,000, probably take it out and get some kind of short-term bottom rally up and get one more push down into January after, and then I think you'll get a rally with the holidays. That's what I think is going to happen in December and with Christmas, and then on into New Year's, and then after New Year's, I think the selling will resume. The same people calling a bottom right here, the same people, they're going to be doing it again when we get down here to 74,000. They're going to call another bottom. And they've been calling a bottom all the way down. And again, these are the same people that told us we had a breakout at the top. It was a fake out. Again, you could bottom around 74,000. I think it's more likely that we move closer to the 200-week moving average right here on this chart. Right now, we're down for the week. Right now, Bitcoin's down 2% for the week. Currently at 88,600. It broke the 90,000 level. It turned off of 94,000. Remember, I told you when we were going to, before the rally ever started, I told you we were going to likely stall in the low to mid 90,000 range. We stalled at 94,000. I told you we could get as high as the just under 98,900, but I told you the high 98,000 area, the high 90,000 area, moving towards 98,000, but I told you I didn't think we would exceed that level. And I told you I thought going into the rally that we would probably stall in the low to mid 90,000 range, which is what happened. Posted this chart near the top and talked about how we're following this Wyckoff distribution model. It's played out very nicely. This is one of the reasons why I just predicted that we're going to have this rally. And the Wyckoff distribution model was suggesting it before we go down and test the 74,000 area and get back all of the gains of this rally. And again, that's what happened with the Wyckoff model here. You have this massive rally, and then you go up, you make a peak, you go slightly higher, and then it sells off, and then you go slightly above those two peaks. That's exactly what we had right here. We went above the July peak, we went above the August peak, and it failed, and you've been seeing it play out beautifully. This thing has played out beautifully, and again, if we continue to follow the Wyckoff model, which I believe we are, you're going to go down, you're going to hit 74,000 and complete this pattern. And that will likely complete crash wave 3. I've talked about at great length in detail. And again, I believe we're going down lower. We're going to get this slanted neckline for the head and shoulders and eventually get a rally back up towards the 200-period moving average, which I've talked about. That's the black line back over here. I've got a couple of different scenarios for a bigger rally, for a smaller rally, but you're probably going to get a pretty big pretty big bear market rally and then resume the sell-off. This is probably going to go on into March or April once we get a bottom. Should we bottom in January, as I believe we will. Bring it up close. I believe we have primary wave 1 here. Liquidation, the final exit point at 116,000 for primary wave 2. I think you have primary wave 3 under construction. I think it'll finish down here just under 74,000. The crash wave 3, and I think it's unfolding in 5 waves. Intermediate wave 1, intermediate wave 2, intermediate wave 3. This is intermediate wave 4, stalling at the trend line. Now you're in intermediate wave 5. You're going to get a 5-leg push lower, likely coming somewhere just under 74,000. Maybe in the high 60,000, 69, 70, 71, 72, 73, something like that. In the low 70,000 range or the high 60,000 range, but you're going to likely bottom and then probably get over the holidays primary wave 4. And then I think after the new year, after the holidays, you'll get the final push down. And I think that will be primary wave 5. And then I think you'll get the large ABC move up. And again, I have marked that coming up to a 50% retracement for ABC or maybe a 61.8 fib, depending on how the 200 period looks. And we could even overthrow the 200 period, but that's what I think is going on. So the Elliott wave count, things playing out as expected. But again, this is nothing more than a counter trend, and 80,000 is not the bottom here. With the Fed, we're turning off of resistance, just like with the Fed meeting over here. We turned off of the resistance with the cloud. Here, again, turning off of resistance with the cloud. Again, since the top, we started the reversal. We got the liquidation move. Bars have remained red. Now we're resuming the decline. Again, down from the bearish rising wedge into resistance levels. Now look right here, this is the weekly time frame for Bitcoin, and look at this. We had the reversal bar at the top. We had the reversal bar at the top. That was followed by confirmed sell signals. Again, bars turned red. They remain red. Momentum turned bearish right here. We had the trend turn bearish. We dropped below the 50 period, the 50-week moving average, the green line. We dropped down to the 100 period. We're trying to bounce. We got a doji last week. Right now you're getting a potential shooting star, or depending on how we close, you could have a gravestone doji, but right now you have a topping tail at resistance into the downward trend line. And again, there is no bottoming signal. Do you see this? Hello? There is no bottoming signal. After the January top down to the April low, we have bottoming signals form with that bottom at the 50-week moving average. After the pullbacks, we had bullish bottoming signals form after these pullbacks. Here we got a reversal signal. There is no bottoming signal. There is no buy signal, and bars remain bearish. The doji is likely, and this topping tail are likely a continuation. We're moving closer towards 57,000, towards the 200 period moving average. That's 200-week moving average in the weekly time frame. There's still too many longs. They're going to be punished. Too many people saying, buy the dip, buy the dip, buy the dip. These are the people that told us the sell-off was never going to happen. They're mathematically based indicators that are telling you this isn't over yet. These are the signals that got it right. Calling the top at the top at major resistance, but we hit the weekly trend line of resistance, validating it with sell signals, and here bars remaining red and all the bearish signals. This is not a bullish chart. This is a very bearish chart. We've already confirmed a bear market in the daily, the weekly, and the monthly time frame. But we're likely going to come down to 74,000, take it out, and then probably get some kind of bounce and likely move closer towards the 200-week moving average before we get the tradable bottom, the local bottom. And I think a massive rally will happen when that happens, a bear market rally. Now, the bears love me right now. The bulls love me over here when I called the bottom. They hate me right now. The bears, they love me right now. What I'm saying fits into their narrative, but the bears are going to not like me again when I call a bottom and predict a bear market rally, which is what's going to happen. They love me now. They're not going to when I call bottom and we predict a big rally back up. And then some of the bulls might like me again, not going to like the message that it's a bear market rally. Again, I'm a trader. I really don't care which way Bitcoin goes. I trade it back and forth. I got very bullish at the bottom, calling the very day of the bottom at support, called a top at resistance. Day of the top, Told you why I thought we topped, when we topped, the divergences in the 4-year cycles and my indicators warning of a top. They were right. And again, they'll likely give me a signal of a bottom, a short-term local bottom, probably by January. This is not it. There's no bottoming signals here. Bars remain red. Signals remain red. This is a bearish chart. Likely going to see a bullish divergence develop on the daily chart, maybe a multiple point bullish divergence. There are no bottoming signals here. This 80,000 level is not the bottom, and you're going to take out the 100-week moving average. I think you have to move further away from the 50-week moving average before you rally back up towards it. As we did in 2021 and early 2022, we moved further away from it, dropping 52% before we rallied back up to it. Those many signals remain bearish. Some of them turn back to bullish. The ones that did turn back to bullish are reverting now back to bearish with the sell-off. Here we turned off of the ribbon like clockwork. Here, we're turning down off of the ribbon. Again, this was nothing more than a counter trend, just like back over here. Beautiful topping signal. As we're selling off and breaking down, trying to break down from that rising wedge in the daily time frame, we're seeing signals revert. The ones that did turn bullish, we're seeing them revert back to bearish, just as we saw back over here with the final exit point with the counter trend to 116,000. Getting rejection here at the orange line. I told you to be watching the orange and purple line. I didn't think we would get above 98,900. Now we're seeing bars try to revert back to bearish. And bottoming signal here, but I told you it was a counter trend rally. Signals that did turn back to bullish, many of them are reverting back to bearish, like right here, suggesting, again, the counter trend is done. Some signals turned bullish, but many of them remained bearish. Here we turned right off of the resistance line right here, turning back down. And again, now we're breaking down from the rising wedge, likely headed down to test 74,000, maybe even take it out. But I think you're going to bottom here probably in the low 74,000, low 70,000 range, 70, 71, something like that. And then probably try to get a bounce for the holidays. Signals remain bearish. The signals here on Sunday all reverting back to bearish, many of them. Again, we have the tightening of the Bollinger Bands here. This is telling you a big move is about to happen, just like it did back over here, the tightening of the bands right before this drop. The tightening of the bands right before this drop, it's telling you, or the tightening of the bands right before this big move up, it's telling you something is getting ready to happen, a big move up or down. My guess is it's going to be a big move down. Now here we already saw momentum turn, and now the cloud is flipping and the bars are flipping to red, and again signals are reverting right back to bearish. Told you it was likely something like what we had back over here, just a counter trend rally. And I told you before the rally ever happened, some of my signals might turn back to bullish if we get a bigger rally. Now it's done and we're resuming the decline.